How's it going, everyone? This is the August trade review for the month, coming out late, but better late than never. So I'm going to break this video into three segments. There are the earnings time spreads first, then we'll go over the swings, and then we will go over the day trades. For the day trades, I don't have all the data back on the M5 chart in OSP, so I'm going to be looking at trading view for the SPY M5 and the stock M5 so we can see how those picks set up intraday. For the earnings time spreads, I have a PowerPoint chart that I use to log all my earnings time spreads so I can see the chart at the time. Just a quick way of how the chart is set up. I didn't quite talk about it in the July video, but I talk about the setup, which is a screenshot of just what the stock was really just the expected and average moves, the times exceeded, the difference in the OL. So these 5 columns are pretty important. I log the entry, so what calls did I take, and at what debit, and then how did I exit, and for what credit, and for what profit, and then just what happened, like, you know, what target did I set, did I make any adjustments, and so on. So that's what I have here. Then I'll mark it in the arrows. So this is a delta neutral strategy, so the movement shouldn't really matter in terms of what's happening with the stock, but it's really about that IV crush. That's how we profit on this trade, and then also a little bit of time decay depending on when you take that trade. But I like to mark these charts, and I just like to see, you know, what happened in these picks. And the market really tends not to be super important for these earnings spreads because there's so much just stock movement and volatility. It really ignores the market, especially early in the morning when there's just a ton of volume. So that's what we're seeing over here. So I did give quite a few picks in August for time spreads. I gave 9 picks, so we're going to go over online picks right now. The first one here was Square. So this is a pretty good setup, and I'll just review my setup quickly once over here. I have a couple of setup criteria here, and I hope this table explains it pretty well, but here's ideally what I like to do. We want to have just good liquidity. We want to have a good price. Average move should be less than the expected moves, but the less it is, then more. And then we want to have a pretty good difference. So, and that kind of determines the times exceeded is how I do my difference. So if it doesn't exceed often, then usually the IV difference is smaller. So I like to get over 50. If it exceeds a little bit, I like to get over 0.75. And then if it's 10 to 15%, then it's over, you know, one difference of 1. So over 15%, I don't take. And then under 40, I don't take. So if you see what happens in the OSP chat, they have a little bit more of an expansive definition of these. I found that being a little bit more restrictive with my time spreads has been more successful for me. So I've been more restrictive, more selective in terms of taking those picks and then logging them in over here. So I have about I think about 30 picks so far, maybe 25 picks. So all right, let's take a look now at Square. So hits that pretty well. You can see that we do have a times exceeded about 13%, but very, very high difference, great option liquidity, good price. So we got a nice credit here. So I got filled at the $62 calls for a 54-cent debit, exited later in the day for a 66-cent credit or a 12-cent profit, 25% profit. So this is a same day fill, so if I can get filled same day for 25%, I will take that as a win. We eliminate the overnight risk, and we get a pretty nice reward. So pretty standard play over there. Now, there was the HEMS earnings time spread, which I didn't actually take, unfortunately, and I don't have it marked up on my chart, but we will take a look on the M5 chart. I did give it as a pick, even though I did not ended up taking it myself. Look at HIMS on 8.5. So here's the chart. You probably would take in the 1750 calls, gap down, and then be filled back in the gap. So you would have a very, very good chance of taking some nice profit on HIMS. And by the way, this is on, interestingly, it's on a Monday. So actually won't get crazy amount of percentage. You should probably go for something like 20-25%. on that stock. And let's take a look at how that looks on the D1 chart, by the way. That is the move. So here's our move down, gap down, come back in, fill in the gap at the SMA, and you would have gotten a nice win on HIMS. Oops, that's the wrong one. Okay, VFC. This was an interesting trade for me because usually I take profits more nimbly, but this one I actually held onto. So here's the setup. Again, pretty much every setup I have, I think outside of Tesla last month, this was a little bit too low for me. It was 40 instead of 50, but still not terrible. So good price is good enough. And good difference, good OL. So I got the 1650 calls, filled at 50 cents over here. And then stock gapped up, and then it didn't quite reject back down immediately. I had a chance to maybe get out over here, but I thought, okay, let me hold this stock and see if I can actually get it to come down. And let's look at what was happening in the market and the stock at that time on VFC. I took this trade on the 6th. So here's the trade on the 7th here. Let's take a look at the market. There we go. Okay, so here's the market on the 7th. And I think the reason I held this trade was that in this market context, once the earnings pressure kind of dissipates after the first day, I have a pretty decent chance. Oops, sorry, I'm looking at the wrong chart. I have a pretty decent chance of this stock coming in, assuming the market also starts to come in. So took it on the 6th. Here is the 7th, where it was being quite bearish. On the 7th, the market was dragging it down. And then on the 8th, I actually managed to get out for a 20-cent credit. So I got a 33% win on the stock, which is about average for me on my earnings time spreads. I average about a 36% win for all the trades that fit my system. So that was a contextual trade where I knew that the stock, because the stock had gapped up, but the market was very bearish, the market could bring that stock back down and I should be able to profit. And a little bit of time for that trade to play out, because took it on Monday, ended up happening on Tuesday. So the rest of the week for this to come back in and the market to make its move down. Next pick I had here was Hood on 8-7. So entered Hood that took the $17 calls for a 22-cent debit. And then I managed to exit that on the open for a 36% gain. So about an average gain over here. And I did have a chance to take more of a 50% win had I let it come in a little bit. But that happens. You know, you're not going to get the perfect win or the perfect pick in that stock. But here's that move on Hood. Barely moved on the next day. So really the ideal setup on that day trade. And yeah, Hood has been a nice... There's some stocks that tend to repeat month over month and just be nice earnings time spread setup. Hood is one of these. I believe I took Hood earlier last quarter. Let's see if I can find it. Yep, I took Hood. Pretty much a very similar setup over here, and took a nice amount of profits. WDC is also one of these stocks you'll see me take again. Same thing with VST. So here's a setup on VST. Never exceeded. Good difference. Good OL. Good price. So took the $74 calls for an 85% debit, and then I exited the next day for a decent credit, not a 50%, probably closer to maybe 40%, something like that. And so I had it over here. I set a target for 125. Then I adjusted it to 110 on the open. And then I actually got filled at 118. So I got a pretty decent fill. And so I was worried about, you know, what was going on this candle. But the clue I think here for me was that just let that first candle finish. And that this tail on VST on some major horizontal support, we could have a little bit of pushback into that range. So here's the 7th, here's the 8th. Pushback into the range, close to this move. That is the wrong chart. And then you get filled in for the 50% on the next target over here. This also happened on, let's see, the 7th. And let's check the day of the week that was. So we get filled on Thursday. So yeah, you can go for a 40% move over here. And since the stock barely moved, you could probably push that a little bit higher for 50%. So that was it for VST. Here is a SEDG ETS that we ended up scratching. So we took the $24 calls for a 53-cent debit, exited for a 53-cent credit earlier in the morning. Stock did move. You can see that the expected move was 19%. And actually ended up staying in that prospective move, but above the average move. So it's kind of in between this range. So where I got out was pretty much on this candle here. I like this green candle. I didn't love this tail. And I did set a target for 71%. And I switched it to break even on the open, and I got a good fill due to some morning volatility, but I actually had a chance to profit on the stock had I held it a little bit later. So here's the action here. So here's the credit mid earlier on the move. And then I managed to get a nice fill over here. You can see that mid was actually lower, but I got my fill at 53-cent credit. And then that credit mid actually ended up rising closer to 65% over here, and actually did hit closer to 70 cents on that point. So this is one where I had a chance to hold, and I'm still kind of weighing out when to hold and when not to hold on these ranges. The main thing that's what appears to me is this first candle, and I'll get into this on the analysis. The first candle can be fairly indicative of where it's going to go. Not always. You can see here's the first candle on hood, and then we actually slap back into the range here. Here's the first candle here, no follow through, and then ended up falling back in on a bearish market. So not always, but here's also actually SQ. Well, it's actually not the best example because I took of it same day. First candle here, no follow through, and then it fails. So as we examine this, looking like the follow through is going to be pretty big. First, we want the first candle to be back into the range, or back kind of this reversion to the mean, quote unquote. If it snaps back out of the range, and then we want to see some follow through, probably within the next a certain amount of time. Give it maybe an hour. We definitely don't want this to fall down here. So first candle ends up holding, and then actually starts to rally up on decent volume. Okay, there is SEDG. I took an AKAM ETS on the 8th. So this was a really nice one. Low option liquidity, but sometimes you can get some nice fills on those. Couldn't get a same day fill for a what's it called? A 15-cent credit. Didn't get the fill, but stock had a big move on raised guidance after hours. So I revised my order to break even. Stock opened up higher, and I was waiting to see if this first candle would be red. So if this was a red candle, then we had a good chance to kind of fall back in the range. So just watching that first candle, and at least see, maybe it'll come down and it'll test this SMA. Maybe it'll even crack through, right? If a stock is going to break through an SMA, it's going to do it on heavy volume, and earnings is the catalyst that's going to override those technicals. So we got kind of this red candle, and then it kind of held for a little bit and went back up. So decided, you know what, I'm just going to scratch this. SMA is right below it. Not sure if it's going to grade through. So ended up working out in terms of that decision. Stock rallied quite a bit on that day. So that's a time where being nimble actually ended up being in my benefit. And then here's a time where being too nimble actually ended up giving me a scratch here. Okay. We took this earnings time spread. Excellent difference over here. Good times exceeded, but difference almost 2, which is really high for an earnings time spread. Took this on the 8th. Set an end of day order for about 25%. Didn't get the fill. And then I revised the order to 100% after seeing the after hours price action. Because it didn't really do anything. So it opened flat, and then the stock actually posted a nice green candle. So then I said, you know what? I'm actually going to push this to 100%. So I had an order out for 44. just ended up being a little bit too aggressive, and then stock ended up rallying, and then I kind of missed it out. So something like 50% or even 60 to 75% is better on the aggressive side. 100%, it is doable, and I've seen pros take 100%, but it is tough. You really have to know the right time to strike into that. Okay. Here is Cisco time spread on the 14th. Got a nice same day fill. Here's our setup. Again, good times exceeded, a little bit higher than I would have liked. So it's a kind of a B plus setup, but I did get a nice same day fill. Took the 45.50 calls for a 13-cent debit, and I got out for a 16-cent credit at 345. So 23% gain, 3% gain on the same day. I will take that. I will take that. Not too bad. COHR. I don't think I recommended this. But I did take the yes, I took an AMAT ETS. Although this was a very interesting leg out on the day, and I don't have the chart because I was unfortunately lazy in marking this chart. So instead, we're going to go to the price action on that day, and I will show you kind of how that worked. So we took this on 8:15, and let's also look at the D1 chart here. Okay, so here's it on the 15th here, and then 16th. That's when it had earnings on this day, earnings after the open. So this is it on the 16th, and then on the 15th. Sorry, here's it on the 16th. So we had a gap down. And in this leg out strategy, our long calls, our short calls were pretty much worthless. So we could take full profits on those, like 90% profits, and you could ride the long calls up back into the range. You could also see, if you really want to see what the market was doing on the 16th. Market was looking bullish, and had a decent little bullish trend day here. Here is the 16th right here. This is the setup I got to aim at, and here is basically the play-by-play of what happened. So I missed the same day exit for a 25% target. So it dropped to a 4.7% drop in the open. Now it's in the red. I exited the short call for profit, and then I was looking to get basically your long call. You want to get a smaller loss on that, and that'll put the whole trade into the profit. So there's actually two ways to play this. The first one is that you could actually do nothing and then take the 50% profit on the snapback to the range. The second play is you could leg out and then go into the 50% profit, and then kind of take profits into this range here on this kind of red candle. So I chose leg out strategy, but didn't have a ton of confidence in this play. And ended up taking some smaller profits, but would have actually held up. I think I took some smaller profits here, maybe, but could have probably held onto AMAT for maybe a little bit longer, or maybe given it one more go later in the day. And that would have been a bigger win. So can't win them all. Even though I did win this all, but you can see that it is still pretty tricky. And what I'm working on is just getting the right time on, when do I take profits, when do I not scratch. But I haven't managed to avoid a lot of big losses on earnings time spreads. Tesla was the only kind of bad loss. So I'm just trying to avoid some of those 100% losers on time spreads. See if I can optimize some of my winners a little bit, sometimes a little bit too aggressive, sometimes a little bit too passive. And it's just learning to navigate that intraday or that beginning market volatility, especially on earnings. It can be pretty crazy. Okay, so that was it for all of the time spreads. Overall, we had 7 wins and 2 break evens on our time spreads. So very nice win on those. And let's get into the swing trades next. All right. So for August, we took 7 swings, 2 wins, 5 losses. First swing came on the 8th of August. So let's take a look at the market setup here. Bottom fell out. Market had came back and it had tested this 100-day SMA. And we kind of tested 8 EMA as well. So I like this rejection. I thought this was a pretty decent point to enter in on swings. And assuming that the market could continue downwards, this was a good time, I thought, for sellers to reload and maybe test the downside. At the very least, maybe I thought we could get at least a higher low and get something going. So the 2 picks I gave were Qualcomm right here. And it was decently weak. I liked how actually that it kind of stalled a lot at the 200 SMA, and I liked how it didn't rally up as much as the market did. It kind of stayed down a little bit lower. So I like that, and it was just sort of already weak relative to the market and kind of dropping more steadily. So I really like that about Qualcomm. That was the setup. MRK. Merck, I like that it actually had earnings, and I took it, on the 7th, so I took it right around here, and I liked how, we were close to this low minus trend line. I wasn't super worried about it. I was like, look, with any market tailwind and this selling, I think we can break down below it. So like this momentum, like the fact that the stock really couldn't rally too much above this candle and above its AVWAP E. So rode this guy out, but ended up taking the loss over here closer to the 29th. And it's really because I got the market wrong. And the stock held up decently well. It actually hold up that 50 SMA pretty well, and actually would have been close to taking the scratch here, given what I had, even though my puts, I believe, expired on the 20th. So would have probably taken a bigger loss had I held it. Had a chance maybe on the 9th. This low over here, big drop, probably could have gotten out maybe on the 9th. Rallied up over here, so maybe had a chance to get a better loss, but overall, it's really just I got the market wrong. Stock wasn't actually super weak on the 6th relative to the market. On the 7th, to when I took it. It had actually tested that level and held that level, and it was actually rallying up relative to the market. So not the best sign, but I still figured I could hold into it. And when the market really broke above this 100-day SMA, that was kind of my time to exit out of my swing shorts. And that was the nimble exit, and then the not as nimble exit would have been here on the 11th. So these are the 2 places where you could enter, or if you want to take some gains into strength, could have done it on the 6th. So that was Merck. If you look at QCOM here, QCOM, I took the loss somewhere over here. Again, on the nimble exit, market broke through on the 9th. QCOM actually held up, but I may have to take my lumps on the 13th. That would have been a better time to take the loss around 169. I took it somewhere over here around 172, which cost me a little bit. The other best chance was to maybe take the loss on the 6th, or maybe here's the 11th over here. We're still taking a better loss, 166, and I got in around 157. So would have been a pretty decent loss. So a lot of this is just getting the market wrong. And actually, my pick was really good on QCOM because it actually almost came back and tested that low, given that the market had made such a big move. And you see this relative weak compression. But that's the tricky part about having these longer swing trades, is that unless you're either nimble or you got to be really patient, because this move here on the 7th didn't even come back around until the 6th. So it took 1 month for me to even have a chance of holding through that. And that's just a time frame I'm not used to holding with any sort of decent size. All right. I took Wells Fargo on the 8th. All right, so here is Wells Fargo on the 8th. Loved this setup too. Again, just got the market wrong. So here's Wells Fargo on the 8th, holding up pretty well, finding some support at that 200. And also, like to a lot of stocks, they had dropped below the 200 where the market was actually just on its 100. So again, we know that this is a loss. How could we have taken a better loss? So first point is on the 9th. So 9th is our warning sign. We're like, hey, it closed above. It's not super great. Warning sign for the stock would probably be somewhere on maybe the 15th. If I'm using this 200 SMA as a stop and it closed above it over here, that tells us that we have to get out. We definitely have to get out on the 16th. Just held it for a little bit too long. I got out closer to AVWAP-Q, somewhere over here. So I kind of got stuck being in the middle of being patient and nimble. Here's the patient exit. So get in, call it 52.40, maybe 52.50. We'll call it 52.40, and then you get out on the close here at 54.50. So, about almost a 2 ATR loss. Now, Wells Fargo ended up actually would have been in profit on the 12th after this rally up higher. So you get your market warning sign here. So this is your second exit point on the 11th. I probably would have taken my lumps on the 11th too. Would have been a better loss. And actually would have been a better loss than on the 15th. Slightly better loss here. I save maybe about 80 cents on that loss. You also could have added to the position too, by the way. You could have added to the position here and maybe take some gains somewhere around here. Scratch out of the first position, take some gains in the second. That's the other way to play it. So again, this actually would have ended up being better if I was more patient than nimble. Still a very weak stock, but the market conditions aren't really warranting a lot of shorts. I also gave ALB as a short on the 12th. Okay, so here is ALB on the 12th. This was a really nice setup, honestly, that we got. So here's ALB on the 12th. Here is the market on the 12th, but we already kind of had the warning signs. Yeah, this is pretty much a picture-perfect setup in my opinion. Market gap up, rallied. ALB didn't budge an inch. Excellent. Market stalled. ALB dropped. So I was in profit here. I was like, hey, you know what? This is looking pretty good. Now here was the clue. This stock rallied. Market gapped up and held the gap and started to advance higher. ALB long green candle. And this is one thing I noticed pretty well. I saw Dan scratch out of this trade. And he always thought he could re-enter. And there you go. You had one more chance to maybe scratch out of the trade. Again, on the 6th, had a chance to scratch out. So either be too nimble or too patient, but I got stuck over here. I got stuck in no man's land because the market, I wasn't ready for this rally, threw me for a curveball, and I ended up exiting a lot of positions closer to the end of the upcycle rather than waiting for the beginning of the down cycle. Now, one trade that actually did end up working out for me was WBA. So I had this short here. I took it on the 12th. This stock actually did a very nice job because it has been selling off for pretty much my entire trading career. Took that on the 12th, and we're kind of holding it around that 8 EMA, around this level. It broke above here, and then it actually fell back down below on the 22nd. Had another little test here, and then we actually came back below, and I believe I took profits on the 27th, which, if I look at this candle here, was around this candle. So that was a pretty nice pick on WBA. Stock has actually continued lower, and you could maybe have taken some gains. I don't know, maybe call it somewhere over here. Market is dropping, stock isn't dropping, so you could take some gains over here around the $8 level. That would have been a really nice win on that stock. So got this one right, and this is just kind of shows, all right, like, even though I got the market wrong, I did get one pick right. The problem is, like, I took a couple of shorts, so I got most of them wrong. So what it tells you that is, like, the majority of shorts you're going to take probably not going to survive the market. Some potentially could, if it's a strong enough trend. And WBA just happened to be one of those. So if I had actually gotten out on the 9th, actually I took it on the 12th, so it actually took it over here. So if I got out, the next exit point here is on the 15th when it breaks through this high plus trend line. So if I got it on the 15th, I would have taken 1018, 1075, ATR 40. So it would take about an average loss, and maybe actually a smaller loss, an ATR loss, about a 1 ATR loss. The nimble exit here on the 6th, close at 877. I got this close here, 1021. So that is a pretty big win, 3 ATR win. Nice stuff on WBA. So that was my nice saving grace here, my nice win. I also gave 2 longs as I pivoted to react to what the market was doing. I took Nike as a swing long on the 16th. So I loved this breakout through the gap. We held all the levels here. So here's the stock on the 16th, holding this level, grinding up higher. And then stock isn't making a huge move. Volume is kind of low. And we took some gains into strength. So this was a smaller win, not a huge win on Nike. But we just kind of pivoted because the market tailwind was bullish. So I did take it with the tailwind. I did have a nice setup on the stock as I entered it here, and was able to take a small amount of profits on that. Then there was Coupang as a swing long, took it over here. Actually still hadn't broken through this level, so actually not really the best pick because I was front running this breakout here. If we didn't have this horizontal resistance, this is sort of a picture perfect breakout, but you want to get in closer to over here, closer to that support. That way you're not in the red too much. Stock does end up breaking out over here. This is a pretty weak breakout. I probably wouldn't have taken that. So Coupang was a loss. Took it here, got rejected. Take the L, call it a day. So overall theme for the swings here is that I got blindsided by the market and I didn't take a lot of nimble losses. I got stuck in trading no man's land. And if I do a quick, this is a rough walkaway analysis, back of the envelope, back of the napkin, walkaway analysis. If I had actually held the down cycle, and even if I had got out on the 6th, the 9th, the 10th, the 11th, I would have taken better losses and actually could have probably taken some profits or some scratches. So I could have scratched QCOM, right? Could have scratched that on the 9th. I could have added and scratched, right? So the add scratch means you can actually take a small profit there. So add scratched QCOM. Look at MRK. Probably could not have added to that in my opinion, but I probably could have taken a smaller loss on MRK. Wells Fargo, you have the add scratch, and then scratch out of the trade maybe on the 11th. I don't think I would have been able to hold to the 12th. That probably would have surprised me, to be honest, after this kind of move. For this stock to sell off so hard and the market to actually rally, would not have really profited off of that. ALB, I don't think I would have been able to add, but I probably could have scratched out of the trade here. Would have scratched out of the trade right there. And then WBA, I would have added to a winning trade and I would have won. So overall, we'd have taken 1 loss on MRK, probably. Small win on QCOM, small win on ALB. Oh no, a small win on QCOM, scratch on ALB, bigger win on WBA. And we don't count Nike and Coupang because they were the shorts. So out of our 4 shorts, we had 1 win. We were 1-4, and had we been more nimble, we probably could have been, let's see, 1, 2, 3 wins, 1 loss, and then 1 scratch. So that's just how it is. But it's learning experience for the market, and just making sure your game plan is fine tuned and adjusted, and just knowing the warning signs of what you would do. So that is it for the swing trades. We're going to take a look at the day trades now for August. Okay, So let's start with the first day trades for August, starting with August 1st with Airbnb. And we'll always take a look at the SPY D1, the stock D1, and then the SPY M5 and the stock M5. So here was a setup here. Market was looking bearish, had popped up a little bit over here, and then we got a big smackdown from this gap fill, bearish trend day. Airbnb is a classic short setup. So this is pretty weak. It really hasn't been rallying this last leg of the market. Compressing over here, not popping up while the market's popping up. And then we get the compression break to the downside with a little bit of market tailwind. So here is the SPY chart for that day. We get a small gap up. Then we start see steady selling. A little bit of a pause. So this is a beautiful bearish trend day. And then this is probably where you may take a little bit of gains here. If I look at the SMA at this point in time, 544 is the SMA. So there is the SMA kind of bounce right here. So when we start to break through this SMA, right there. So when we break through here, test, and then we start to inch lower. Oh yeah, that's your time. You can even get in another short. Tall bounce here, marginal new low, and that's when you can take some of the gains. It's also getting later in the day. So beautiful trend day here, especially if you get in early on this and you can just ride it down. And you can see it does a couple things. One, it churns through this gap fill because of the price action. Churns through this, chews through that, a little bit of pause. Over here, a bit of a bounce, a little bit of fighting, then we break through. So you can scale out at certain points if you want and add back in on other points. How do you play Airbnb? Well, Airbnb actually has a flat open on that day. And the main point right here, there's a couple points of resistance, or sorry, support. So first one that I see is right there. Actually, I wonder if I can do a snap. There's probably a way to snap it, but I do not use TradingView anymore, so I don't quite know. But, here's kind of what you see here, all right? So it breaks through this level pretty convincingly early in the day. So you have the stock in the morning, flat open, doesn't bounce with the market. So here's our market bounce, breaks through here, and here's it at 1020. So market's actually confirming this gap, this move down lower on the gap. Airbnb is getting to this level. So you can probably hold this resistance and see what the reaction is like. Now we know, here's where you have to be careful. So on Airbnb, right, there was a decent reaction here from the bounce, but it wasn't the main thing that I saw on Airbnb, and here's what's important, is when you're at these D1 levels and at these compressions, it's not really able to actually advance past into this gap. You can see how there's a lot of red candles, first of all, a lot of selling, a lot of relative weakness. Every poke gets smacked in. Every poke over here gets smacked in. And the stock gets in on a downtrend over here. So now, if Airbnb had made this move lower and actually had a strong move back into the gap and then come back down, that would tell me that this resistance or this support is pretty firm. So I actually wouldn't want to... I would be very careful about the short here because it doesn't have as much of a chance of producing. But we got the ingredients that we needed. First, we know the stock is weak on a D1 basis. We know the market has some D1 selling pressure. There's some tailwind over here. We confirmed that breakthrough. We're entering very close to that break intraday. We're close. Here is our now, I guess, resistance level that we would hold on to, and this is a nimble exit. So if the market ends up faking out, not working, gets back in the range, all right, you just take the loss, move on, right? That's the risk you're willing to accept, and that's the reward you're willing to accept. Nice kind of trend day over here. Could maybe hang on to it to see what it does on the next day if you're more aggressive, but that's some nice gains on Airbnb. So that's where I would have taken the trade. The other entry point as well is if you're, not really chasing over here. I'm not really doing this. Okay, I'm trying to get this set up nice and easy here. stock compresses over here, and you can wait for the market to not do too much. So here's the market bouncing from 11:45 all the way to 12:15. Here is the stock 11:45, 12:15, starts to make a new low of the day. Here's new low of the day at 12:20. And then you can say, look, if it breaks through the SMA, I get a nice move down. If it doesn't, then I'm out of here. So you can be a little more nimble, so take some gains into strength here. Or if you're more patient and you wait till the end of the day, you know that the stock is going to close near the end of the day. If you enter early, it's always better to hold to the end of the day on a bearish trend day, right? Just hold through as long as you can, right? Even if you take profits here, right? As long as you got in the first half of the day, you would have made money. And there's a little bit of a bounce, profit taking bounce. And here's your warning sign on the double bottom here. But you have time to get out of the trade because it's a strong trend. It's not going to reverse easily. So big spiel for that. But I really want to call that an Airbnb because I felt like there was a lot to take advantage of on that day, knowing the setup that we had. ULTA is a very similar setup to Airbnb. Again, not rallying on a longer term basis, compressing while the market's rallying, then breaking through that compression on that kind of weakness. So very similar setup. Not going to go into it as much on the D1. Here's ULTA here on the second. Zoom out again over here. So big move down, and we can see we've been slowly just chipping away at this support level. There's some support here. There's some support here. The main support I see is at 362. So that's where institutions are buying. Get a flat open. This is very early in the morning, by the way. First candle breaks through that level, right? Not rallying with the market. We get this move down here on 9:55. I mean, this is a day, if you're able to get in early, if you're able to get in pretty much in the first hour of the day, even on a pullback to the 8 EMA, I mean, you are in business, right? You just have some really, really nice gains. Yeah, look, take some profits at the last 30 minutes. This might be a little profit-taking bounce. So last hour, take some chips off the table, start to scale out. But that's the move you read it over here. Now, in ULTA, I probably entered somewhere again over here when it was breaking down at 12:25. And again, the market was rallying. ULTA was not rallying with this little bounce, hugging the low of the day. That's the move you can take. And I'd probably take some gains here. A little bit of bounce, double bottom, 230. Market starting to rally. Well, I was actually going over here. Starting to rally a little bit over here at around 3. And then ULTA is holding its own, but then eventually starts to pick up as well. So that was a trade from there to there. Nice win on those trades, taking 2 really nice trades on a bearish trend day. The key in these bearish trend days, I think, is if you're able to recognize it early, you have a super sweet profit potential. I mean, we're talking about, I don't know, 1 ATR moves easily. 1 ATR moves on a day trade, probably. Okay. 8-2, we took JBL Short. Very close to my name. Here's our breakdown on the second. So here is our channel, bearish channel, breaking to the downside. So potential for an acceleration. We have to be careful. Lots of volume, which is what we don't want to see. But we want to make sure this channel holds. Spoiler alert, ends up not holding, pushes back up higher. But nice break to the downside here on the second, and way more volatility in the market, which is found some support at that 100-day SMA. Let's take a look at the intraday charts, but good picks overall. We're trading with the longer-term tailwind. We're picking a good pick, technical breakout, heavy volume, all of the good stuff, healthy ingredients for our trade diet. So here was JBL, parabolic move in the open. So if you didn't get in, I mean, this is a gap and go trade. It's very hard to trade these, I think. So if you don't get in the first half an hour, well, how I would trade this as a gap and go is here's the market on 10:05. So I'd take JB breaking, kind of fading through over here, breaking down 10:05. We know that this low is around, where's this SMA here? So around 529. Here is our SMA. Okay, so you can take down here. You can maybe write a quick move to the SMA if you really wanted to. Has to break through quickly. See how it's stalling out over here. That's your chance to get out. Second time doesn't also do anything, so that's your second time to get out. Ends up actually gapping down below it. So if you don't get in at 10 o'clock, and I'd honestly just take this gap and go get out, get in here, get out here, take my quick gains into strength, and not really think twice on a gap and go day, just because we're so close to technical resistance. Now, if you do want to hold it, that also works out pretty well. And you will be in profit the entire time. I'd put my stop here. You have to be willing to hold through a contra cycle. So here's our contra cycle. And so your very short-term nimble trade here, I mean, 5 minutes, maybe an hour at most, you join this trend, exit into strength. The contra cycle is going to last a little bit of while. So here's 11:10, and it ends up breaking through it at about 1:20. So about 2 hours you got to hold through this, and then you do get rewarded. Now, I took this break, I actually took it right around here at 12:50. So here's the market breaking down at 12:50. Here is JBL not breaking down. So I front run this a little bit on that day, paused a little bit, and then actually started to take off. And I took gains into strength because we had formed some support over here. And I thought, I don't know if we're going to get a double. I'm like, look, at this point on the day, if we get some stack red candles, I think we crack through and JBL looks pretty good. Now we started to pitter patter. We're like, we're going down. Some tiny red candles, some low volume, some mixed candles. It's not the selling that we saw here, right? Steady red candles. Here's the SMA break. This is what we needed, right? Like we got some tiny body candles, right? It's not saying that all tiny body candles are warning signs, but we got this compression. How long did this last? 1, 2, 3, 4, 5. Next leg lower. So lasted about 20, 25 minutes. Here's a bounce, 20, 30 minutes. Get short. Here's another bounce. This lasted even shorter. This lasted like 20 minutes, and then we got smacked down again, right? Sideways motions for about an hour, and we're barely moving from here, right? This distance is, so this bounce is fine. This move is lower. This move had to be stronger, right? This next leg had to be a ton stronger, and it wasn't. And that's why I took gains into strength. I think I took gains somewhere like here, like 97.54. So I took about $1.50 on that. The warning sign again on this one too, super high volume doji at 350 or 150, sorry. Market's also starting to stall out at that point. Big reaction here. So by the way, even if you get, you probably get stopped you could get stopped out on this reaction if you didn't react nimble enough. But how I took the trade is I got in here, could have added a little bit on the break and then get out of the trade. Sell it into strength. I took some profits because market wasn't moving as fast as I wanted it to. So bit of a tricky trade because if you didn't have the market context, you stuck a little bit too much, you would have actually taken the scratch or maybe even a loss on the trade. You know, here and then here. So for me, being nimble has worked out pretty well for my day trades. Okay, that was a big one. OVV was the other short that we took that day. And sometimes I feel like I can just tell by looking at the candles what day that I took it. I don't even if I don't remember. So here's our breakdown. Compression break, gap and go, lots of volume, technical breakdown. Love to trade these guys. High volatility, high R-vol. Obviously, here's the market on that day. We know what the markets had done. Pretty dead day. Okay, OVV, long red candle. Not doing a whole lot, and then we get the breakdown. So this is where you want to. This is the ideal stock entry, in my opinion, at 10:10. Maybe you could do something like here, but this is probably where I would take it. And it has some nice follow through. Here's a really high volume candle over here. That's moving out. Stock isn't do a whole lot, so you can probably weather out the contra cycle if you want. As long as we have this descending triangle, you're good. So for OVV, where I took this breakdown was right here at 120. So here is our support. And you can see that we have a, probably could actually do a disjoint channel if I really wanted to. Right, so there is our higher lows, or sorry, lower highs. Testing this level a couple times to get the breakthrough, and then took some gains into strength. Market starts to stall, not doing a whole lot. OVV still looking good, but doesn't really do a whole lot later in the day. So you had one chance to get in early, take some nice gains into strength, maybe ride out the cycle a little bit. And then your second chance on OVV was to get through on this descending triangle break later in the day. So pretty similar setup in my opinion on sort of these gap and on go days. The clue is going to be in these first 30 minutes. So I feel like there's a big potential to act in early there. Even the 45 minutes would have still worked. Got some nice profits on that trade. Okay, next one we had on 8.5 DLTR. Oops. I didn't even know FLTR was a stock, but now I have found out. DLTR. Okay. Yeah, that's a nice pick. That's a super nice pick. So here is our big move down. Now it's showing some fake relative strength. This is a really weak stock, but it's just not super out of the gate, which is why we traded it on that day. Market bottom fell out. So let's see what that looked like on over here. So market's rallying up. It's choppy, 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 choppy. If we look at DLTR, oh boy. Yep. So moving down, and stock is market's rallying, stock is not rallying. Pretty much get in here, take gains into strength, right? That's just kind of the name of the game. Because it managed to break through the high of the day, we got that sort of selling climax. So this ideal entry right here, 1250. Let's look at SPY at 1250, selling off right over here. Some nice steady selling. You could probably wait for that double top if you wanted to. And then there's some selling pressure here. But good day to be patient. Pretty choppy day, and DLTR fairly choppy stock on Monday. So I thought it was a bit hard to trade. Probably do some sort of hit and run trade on this guy. But yeah, that's how I would trade DLTR on that day. Get in here and take gains into strength. And if it doesn't work out, scratch out of the trade. You have a nice chance to get out of the trade also later in the day. Okay, 8.6, we had LTH as a day trade long. So let's first go to LTH on the D1 chart. So here is the market on the 6th. Another sort of, it's rallying up, but there's a lot of tails above bodies. Here's LTH on the 6th. And it's a nice bullish trend. Pulled back here, didn't really drop with the market, and is moving up on higher volume. So certainly quite a nice long setup. And this is the set pattern for today. So it's rallying up higher, pulls back, moves up higher, pulls back, moves up higher. And here is SPY on the 6th. Is just rallying up higher, pulling back here. So probably get in one of these pullbacks. Maybe take out 1145-ish. Here's 1145 on LTH. Take gains into strength, get in the next dip, bounce off of VWAP, and ride it, take gains into strength. So that's probably how I would have played LTH. There's two ways to do it, but I would have taken it right here, 1145, and take some profits into strength on that sort of day. Given that this retracement is, it's still decently deep to VWAP, so we want to see us break through the high of the day. We test it once over here, pause, 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 pause. And when you see that we actually don't, we don't test this, we don't get an immediate smackdown, that tells us that we're probably going to go up higher, barely budge, hold this candle and even inch up higher. So it's a very gradual move up higher as we're slowly crawling our way up to that SMA, and then sellers take their shot later in the day. All right, on 8/7, took ARMK as a day trade. So here is SPY on the 7th. Let's take a look at ARMK. On the, oh yeah, here it is. On the 7th, ARMK day trade short. So post earnings trade, gapped up, and this is a pretty interesting setup. ARMK was getting through that. There was some horizontal resistance here, maybe a high plus trend line, probably. You could draw it in a couple of ways. So something like here is valid. And then if you wanted to draw something like that, both of these providing some resistance over here. So ARMK gapped up from earnings, couldn't do anything. And then we got the smack back down into the range. On an intraday chart here, SPY gapped up, testing, narrowly doing too much. And then again, we get this gap up, descending triangle, right? We take the first high, challenge the low, don't do anything. Second high here, which is lower than the first. And then we get sellers start to get in and they start to move into the gap over here. That offers a pretty nice shorting opportunity. So here is ARMK. At that moment, we get through this gap over here. We hold the gap, and let's look at the time where SPY breaks through. It's around 11:45. 11:45 to 12 is that time where you can enter. So here is 11:45. Pretty much beautiful entry. This is pretty gappy on this trading view because it's missing some volume data and some price data. But get it over here, and you could ride that gap fill. Probably right here. Here is the, not quite the close, but got close to the close. Here's the close. So you can ride that gap fill early. And yeah, take some gains, ride that to mostly the end of the day, right? We have a gap up, and that's the best opportunity for bearish trend days. And you can ride that out for the last 30 minutes. Take a look at this stock in the last 30 minutes. Yeah, you take some decent gains here. When it starts to high volume dojis, start to rally up, get some green candles. Also not a little bad entry point over here, getting close to the ADMA. Nice little Heikin-Ashi reversal probably in here as well. So that's a nice little reversal win, a little bit more advanced because the stock actually was strong in the beginning of the day and then actually shifted pretty weak because could not actually hold this move up above D1 resistance, and that smack back down into the range. That's what we traded, and we took some nice wins there. Okay, next short was on 8/9. We had NFE. Eight nine. Aha, post earnings trade, my favorite. So not super overextended, but lots of volume, lots of volatility, technical breakdown in a bearish trend. My favorite kind of trade. There's NFE, and let's go into 8/9. Yep. So here's the stock. Ideal entry is really probably earlier in that day. So let's go to 8/9 here. Let's get our market bearings. All right, here is 8/9. Okay. Marking our days. Okay, so market, mildly bullish day here. All right, tested SMA, test, rally up test. So kind of a weak day here, not a ton of volume in that rally. NFE is kind of going to do its own thing. So if we look at this ideal entry on the stock, first early day entry, this is a beautiful setup here where we get the strong leg down, compression, 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 very short compression, and then we move down lower. This is a beautiful setup early in the morning. We kind of gone through one little contra cycle here. So if you got in at 14.20 at 10.10, let's look at what the market was doing. Market was actually grinding up higher, so not really doing a whole lot. And then actually started to move lower at 12.20. So here's the market, 12.20, market's moving lower, stock isn't moving lower. That tells us that there is some buying in here. So you could have taken some gains when it didn't move lower, or you could have tried to hold on and see if the market could actually get anything going to the upside. But downside is pretty limited given the fact that SPY was above its 100-day SMA, seemed to be holding over here. We weren't able to get too much traction on the way down. So that was the ideal trade. Now, where I took NFE was right here on this LRSI pullback. This was a beautiful entry, and don't have really any qualms with it, in my opinion. I would take this probably again. Stock ended up breaking through this high, and I just took the loss. Just, you know, broke this high. This should not have happened. This candle is fine. This candle is not fine. Didn't get smacked down pretty easily. Got above VWAP as well. Now we did get a nice leg lower later in the day, but you know, maybe you could have scratched out later. The other thing you could do is take it here, and waited for this move over here. Then when it broke down over here, add to the short, and then actually take gains into strength, scratch out of the original trade, and take profits on the leg down, and that ends up being a small win. So that's the ideal way I would play it. Unfortunately, did not quite get that. And here's also the other clue. So here's the market rallying here from about 12:30 to about 1:30. So 12:30 to 1:30 starts to break down. We get another little pop up higher. Market actually just kind of goes into garbage mode quite late in the day. And then 3 o'clock, not doing a whole lot, flattens out, and then some sellers come in and start pounding this guy late in the day. So NFE was our loss on that day trade, but I thought it was a great setup. Nothing really I would change too much on there. I just gave another play you could do adding on that pullback in case that first move is wrong, but your still kind of original thesis is bearish. Okay, I gave CLS long as a day trade. And I gave this on the 15th. All right, so here is CLS as a day trade. Nice little pop up over here through that SMA, breaking through some levels over here, and we are trading with the market. So if you notice that actually a lot of my day trades were originally short, they started to flip to long even though I was holding my bearish swings. So tells you that you can actually trade both sides of a move and hold through one move and trade the other side of the move. So here is the stock on the 15th. And let's take a look here. Let's go to SPY on the 15th. All right, so the next stock we took was PDD as a day trade long on 8/16. So if we go back into our chart, here is PDD on 8/16, breaking through some high minus trend lines, moving through some horizontal resistance, nice heavy volume. And here is SPY on the 16th over here. So as the market's gap down, PDD actually held the gap and is moving up higher. On the intraday chart, here is the SPY movement for today. We've kind of filled in that gap earlier in the day, and then we broke out and we had a nice movement. So gap fill, big smackdown, found some support, and then started to rally up higher. Now here's a setup on PDD, long green candle, test the downside again, form a bit of a higher low. And then we actually break through this high of the day, and I took it right over here. Took some partial profits here, and then it took remaining profits over here on the trade. So was a pretty much nice move. This is like a pretty textbook setup for me now. The one thing to keep in mind is see this super high volume candle, and then this clue tells us that, the fact that this failed tells us that, yeah, it was a bullish climax. So that's actually why I took partial profits here. Sometimes you get lucky, and if you take full profits and this is actually ends up being the meat of the move. Or other times it actually ends up going up higher and higher, and you miss some of the moves. So it's kind of a judgment call. Now the other thing I'm watching for too is if you can kind of get it in on this earlier part of the move, this steady organized green buying over here, nice tiny green candles, and you can say, look, if we break through the high of the day over here, I can add and scale out. If we reject, then I can scratch out of the trade. So it's a little bit of an earlier setup, but has a little bit more of a runway to work with. But was a nice win in PDD. Okay, now on 820, we took AI as a short. Let's take a look at that. And I believe this was 820. 822, here is 820. Okay, so it's in a bit of a downtrend. Was breaking out of compression, had some decent volume that day. What is SPY doing? 819, and here's 820. So a bit of a dead day. Not doing much on the market. If we look at here's the 19th. Here is that's the 21st. Okay, here is the picked the wrong date here. 20th. Okay, so here's the market on 820. All right, so you can see that after this reversal, we're kind of chopping around. We had a little bit of some bearish momentum, but ended up stalling out. Look at AI over here, and let's take a look on the 20th for this stock. Okay, here we go. So that's a beautiful move on AI earlier in the day. Broke through this compression, steady selling. So that's set up again right over here. It's your first entry point, gets out of the compression, breaks down. That's your second entry point. And then you could maybe get in on that pullback over here at 1210. Third entry point. And then again, now that the trend is super strong, you know that once you're in kind of this after the first 2 hours, there's a greater chance of being a pullback, right? And so you can see this pullback over here. If you got in at exactly 11:30 here, you actually still would have been in profit, and you wouldn't have had to break even. So anytime after that, probably had a chance to take some heat. So that's kind of the key on that stock, but was a nice win. Took it on this breakdown over here, 24.47, and then took profits on this area over here, wondering if it was going to be potentially a double bottom. So that was AI at that time. And if we look at this setup over here, 1125, where is SPY? SPY at 1125. We expected it to break through the low of the day potentially here. Didn't quite do it. We got a move up. And then on that retest, probably later, 1255 or 1, you could probably hang on to over there. You can see we got some high volume candles coming in. And then when the market started to rally up on this green candle, 1052, the stock is starting to respond. And that's also another little exit signal that you can use. You can see how, really the stock tends to tell you what the market is doing with its gravitational pull. The other one we took on that day was PanW as a day trade long. Oh, I actually went to the wrong chart here. And I remember PanW very clearly. Okay. So here's a setup on PanW. And here was the day. And I believe this was a post-earnings move. Let's let it load. Yep. So post earnings move, we were day trading it early in the day. So if we zoom back on this chart, so you can see it's marked up as all heck, but there was some horizontal resistance coming over here. So that was kind of our area or our target. So here's the setup of PanW, long green candle, test, breakout. That's when I took the trade. Now, market, I took it right. If I look at this entry right here, very early in the day, 10:05. So first 35 minutes of the day. Here's 10:05. Oh, sorry, here's the 10:05 candle. Market sold off very strongly. PanW tested VWAP, held, inched up higher. So I got in around 368 and I got out around 375. So I took a very nice profit on PanW. Now this is one of my favorite setups. It's not super common, but it's just this long green candle with this kind of compression at the high of the day. You can see we compressed here for about 30 minutes, and then we break that compression to the upside. So that's a very powerful signal. It tells us that we've digested the gains. It's early in the day. We have a lot of profit potential. We have a good chance of going higher. And all that post earnings strength actually withstood the market. So considering the market did all of this, as soon as it stalled, right, you can see when PanW started to go up pretty much around 11. Let's look at the market here's 11. So the selling waned just for a little bit. As soon as it waned, this stock started to move up higher. Right, grind up higher, and then kind of stopped out at around 12. Look what happened at 12. Market made its second leg lower, still held the gains, came in for the double top, and was holding the gains for most of the day. And then when the market actually started to rally, again over here from the, let's call it around from 2 to maybe 220, you can see that it's actually not participating in that rally, which tells us that we've really hit a wall on that selling pressure. And then it started to decline. So even if you didn't exit out over here, you had a ton of time to exit because of the strength of the stock. And that was the win on PanW. So those were all of the day trades for August. If we look at the total month of August, I had 30 trades and 38 picks. So 8 of those picks ended up being no trades. We were overall 22 wins, 6 losses, and 2 break-evens. In our day trades, we were 12 wins and 1 loss with 0 break-evens. On our swing trades, we were 2 wins and 5 losses on our 0 break-evens. And on our time spreads, we were 7 wins, 0 losses, 2 break-evens. And really the big thing in this month was we took some swings, we had a market expectation, and we got caught on the wrong side of a strong market move back up. That's the reason we lost 4 swings, I will say. Right. 1, 2, 3, 4. Yeah, I mean 4 of those, my swing shorts, pretty much that's why we lost them over here. So that's what happens. But again, if you're able to day trade and swing trade and have other strategies, you can not kind of hyperfixate on one specific strategy. Rather, you have other ways of making up money and reacting to the market in real time. All right. So that is it for the August trade review. September trade review coming out very soon when the WBA swing short is closed.